Hello, Oracles. Today was not a pretty day. It looked good for most of the day, but it looks like the market is having some commitment issues. We go green, and we went green for quite a while today. It was looking good, looking like maybe we were going to be breaking out of this. With the NASDAQ bouncing off correction yesterday, we're thinking, you know what? All right, maybe that's the bottom, and we're going to pull out of this. But no, we got faked out yet again. Another one of these head fakes that we have been talking about. And, it seems like it keeps going on. And then after hours, Netflix did not set a good precedence for tech earnings coming up. They beat earnings. They did a really great job on beating earnings, but their forecast was really dreadful. Their forecast was down almost 20%. And their forecast for new users is down significantly. And so when you factor those in, then the stock is down 20% itself because of this news. And now what is this setting up? So for tech news, this is setting up that, maybe all this valuation that we said was too high is actually too high. And now they're thinking, well, if the growth isn't growing like we thought it was, the market recently has been pulling back because there were, talks of valuations are still too high. If we're going to be getting into a potential recession, valuations and high growth stocks are extremely overvalued. So we start to pull this back, and now they've gotten their justification with Netflix and showing, growth is not expected to be there like we thought. That's not going to be there. We're going to slow down. And so now we're going to have a lot more turmoil. And I think Netflix might be setting the stage for some questionable tech earnings. So what can we look for in going forward with all of this into tech earnings? Well, a lot of it's going to be, what is your forecast? Is your forecast looking strong? Tesla last year set themselves for a 50% growth year over year. If they hold true to that and they say that they're still going to continue that and come out with the numbers that we think that they're going to come out with, they might be one of the ones that come through this pretty strong. After hours tonight, Tesla is still coming down. They were up 4.5% today and then pulled back to finish just barely green. After everything that was going on with Tesla today, it was like one of those days where you work really, really hard all day long, and at the end of the day, you actually accomplished nothing. And that's literally what happened with Tesla today. And now after hours, we are in the red. As of the time of this recording, we're down about 1%. So, I'm sure some of that has to do with the Netflix issues going forward with their forecast. We will find out for sure next Wednesday what's going to happen with Tesla. Another issue we have with Tesla next week is on Tuesday and Wednesday, we have the Fed meeting, and they're going to be discussing things, and we'll be finding more information about the Fed's stance on inflation and interest rates. So the good news about that is it's Tuesday and Wednesday, and we will have all of that information out before Tesla has their earnings. So at least when it comes down to that, we'll have clarity, at least from the Fed, before Tesla earnings. So much going on right now, I still am looking at fundamentals. So again, regardless of the stock price and how the whole market is really in such a flux right now, I'm looking at fundamentals. Tesla has 2 new factories opening up. We've got the roadmap that's going to be coming out. When we hear the roadmap, we can get timelines of things coming out, all the projects that they're working on, and we'll get the numbers and what their forecast is going forward. As long as those are all still holding true and holding steady, then I'm going to hold true and hold steady. It's not like I'm going to sell either way, but at least, we can get an idea of fundamentally, are we still on track as to where we were before? And now we have been seeing this pattern going on with Tesla and many other stocks. The entire market altogether is we start the day, we start looking green. We're like, yeah, this is great. And then it sells off. So part of me is thinking that they're trying to lull us into this. And some people are going to start playing this as I'm going to buy in early in the morning. And when it goes up to some higher numbers during the day, I'm going to sell off. And then I'll buy in at the end of the day. Not to say that can't work. But how long is that going to go on for before all of a sudden we don't get that end of the day sell-off? And then all of a sudden the stocks keep on running. And then we start our next bull run. When do you get back in? Because mentally, you're going to be thinking, I don't want to get back in now because the rug might get pulled out again. And then you're going to keep on thinking that until eventually you're going to go like maybe a week or two down the road and you're like, well, I guess we're on our bull run and I'll buy in now. And part of my thinking is what's happening is when we go in and we start buying in at that point where we're finally like, all right, I'll cave and I'll buy, that now sets the new support. But think about it. Maybe the stock runs up 10 to 15% at that point. Well, you've now set the bar and the level and the support 10 to 15% higher than where big money bought in. So big money now has this 10 to 15% buffer below where you bought it to be able to force you out of the market and force you out of that stock even more often. That's a reason why I dollar cost average, and that's why I encourage high conviction stocks that you're in to just hold them. Because otherwise you're going to get stuck in this trap of you're now selling at a price where maybe you're taking a loss or a very minimal profit, and then you have to get in later and you're not going to get as many shares later. Take Tesla, let's say it's $1,000. Cool, it runs up to $10.50. You sell it at $10.50, you made a $50 profit. Great. If it doesn't come back down, now you've got to go and buy this thing back at $1,100 or $1,200. You've just now decided, hey, you only have $10.50. You now have to find more money to buy in more shares later. Versus if you were in at $1,000 and just held, you'd be in at $1,000 and you'd be up $200. So again, you've got to make your own decisions with your own portfolio and doing your own research and following your own gut feeling. But for me, I would rather hold through this in my high conviction stocks because, maybe we do fall down and you get that opportunity, but if you don't, now you've got to scrounge up extra money just to get back into the stock. And so for me, I am not one who can watch the market every day. I can't trade every day. I can't follow all the patterns that are going on to be able to find the highs and the lows to try and make some profit and then hope that the profit I make and have the taxes taken out is going to be worth it for me to buy back in lower. I'm not going to play that game. I'm going to play the game of, hey, if I see the stock being a little bit red and I like the stock long term and I think the price is good, I'm just going to buy it and I'm just going to hold it. Because at the end of the day, short term could still be 6 months to a year out and we see this roller coaster ride. But you look 5 years down the road, that roller coaster ride is going to be over and we are going to be higher than we were during this time right now. So regardless of whether the stock price for Tesla is $1,100 or $900, in 5 years, that stock is going to be probably close to a 5x and you're going to be significantly happier that you bought it, whatever you bought it at. And now today I had a good opportunity to potentially get out of SoFi. I opted not to. I've been dollar cost averaging down for it. I was in at just over $14 for my cost basis. And with the run that we had during the day today, I was up over 12%. Could I have sold out? Sure. What I did though is I looked at my portfolio. I said, all right, where am I at with my cash reserves? Because we have a lot of good buying opportunities right now. And while we are technically in some people's eyes overdue for an S&P correction, we don't know if that's actually going to happen or not. So I looked, I was like, I have 6% cash reserves right now, and I have another 10% in cash plays that I can pull out if need be. So for me, I decided, you know what? I'm going to let SoFi ride. SoFi just got approved for a national bank charter. And I said, you know what? I'm going to let it go because I think SoFi can do well long term. So instead of selling out and taking that 12%, I decided I had enough cash reserves. I held on. Will it drop a lot further if we maybe get a correction? Oh, sure. It certainly can. Maybe I made the wrong decision. But based upon where I'm at, taking my emotions entirely out of it, I said, what is my game plan for what I'm looking forward in the future? Do I have the cash reserves I want to take advantage of that game plan? And I did, so I held. We'll see what happens in the future and the next couple of weeks, but that's what I ended up doing for my play today. And if we do end up seeing this Netflix kick off into a potential correction, we just saw it happen with the NASDAQ yesterday, it fell more today. Is the rest of the market going to come with it and we see a correction soon? Maybe, and maybe this is one of those things where, hey, we're going to see a correction going into what we think might be interest rates going up and a recession. And perhaps a correction now is kind of going to prevent the real recession from happening, or maybe this is the kickoff to something. So many uncertainties. I don't know what's going on. I just know I have set myself up to be able to take advantage of opportunities. I've got my cash reserves, I've got my dividend ETFs that are out there. So I'm going to be playing this day by day, see what's going on, just follow things gingerly and be as agile as possible. And I'm hoping that as we go through earnings season, maybe I'll have some of my lower end stocks that I'm looking to get rid of. Maybe they'll pop on some good earnings. And if that happens, I will sell those to free up a little bit more cash and then be able to put that money into my higher conviction stocks that I want to be in long term. And now, just to be clear, I do not want a market correction. I do not want a recession. I am not one to short the market. I don't even know how to do that yet. So it's not something I want to do. I do not want this, but I want to be prepared for it. So my strategy is always prepare for the worst and hope for the best. So I'm preparing for a worst case scenario. Of course, I'm hoping that we don't go there. I'm hoping that we hit euphoric runs and we get into our next bull run starting tomorrow and we can all be happy and dance like unicorns in the clouds. You know, I don't want it to be, I want green, I want happiness, but for me, the way I look at it is you can't have a continuous bull run always happening. We have to go red at some point. It's going to happen. I want to be ready for it. And like I have said before, when you are ready for it, and you take advantage of these situations when we go into corrections and we go into recessions and you buy into it, this is where fortunes are born. And when you buy in then, when we do go green again, because we will go green again, when we get there, your investment is going to be worth so much more later than it is now. So it's a good thing for us to go through these times. It is healthy for stocks and the stock market to go through times like this. And these are the times where you just make sure that you've got cash on hand to buy some fudge. Because I know for me, I want to buy some more fudge. I'm always ready to buy fudge. I always have cash on hand to buy more fudge. And that's what it is. And when you come out of it, you'll have even more cash later to buy even more fudge the next time it happens. And this is precisely how you multiply your wealth. Let me know in the comments below, how do you feel about the Netflix earnings forecast and how far it fell? Do you think this is going to be a precursor to a potential larger correction and maybe a bear market coming up? Or do you think that we are going to rebound and maybe this is just a one-off situation and we're going to see great earnings next week and a market turnaround? Let me know your thoughts. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I will share all of the latest Tesla news, stock market information, and all of my daily trades that I make over there. Otherwise, have a great day. I will see you all later.